Hello and welcome to the Pakistan Sustainable Banking Conference. We'd like to welcome you to today's event, and we will start off with a recitation of the Holy Quran.
بسم الله الرحمن الرحيم قل هو الله أحد الله الصمد لم يلد ولم يولد ولم يكن له كفوا أحد.
Distinguished guests, please welcome me in introducing our Master of Ceremony for today, Ms. Tanya Khan Jamal, a Senior Investment Officer at IFC.
Assalamu alaikum and good morning. Governor, State Bank of Pakistan, Mr. Jameel Ahmed, Deputy Governor, Ms. Seema Kamil, and senior leadership of the State Bank of Pakistan, Council General of the Government of Japan, and the leadership team of the IFC. Ladies and gentlemen, a warm welcome to all participants who have joined us today. I'm Tanya Khan Jamal, Senior Investment Officer at the IFC. Before we start, I would like to share a few house rules. This venue is a non-smoking venue, and the hotel has designated areas for smoking. We would request you to please place your mobiles on silent throughout the entirety of the event. The hall has 4 marked exits, 2 at the back and 2 on the side for any emergency. And we will endeavor to maintain timelines as per the agenda, and we look forward to an interesting and engaging morning today. To give a background of today's conference, the State Bank of Pakistan issued the Green Banking Guidelines in 2017, which includes environmental risk management guidelines and support. In July 2020, IFC launched the Pakistan Sustainable Banking Advisory Project, aimed to improve environmental and social risk management performances in the Pakistani banking sector through a multi-pronged approach, including support to the State Bank of Pakistan to develop an ESRM implementation manual, improve awareness, and build capacity amongst banks and local consultants on ESG issues. To facilitate dialogue amongst key stakeholders on ESRM best practices and green banking and discuss opportunities for the banking industry in Pakistan to support green and resilient economic growth, the SPP, the IFC, a member of the World Bank Group, and partnership with the government of Japan are organizing today's Sustainable Banking Conference, which will be a key milestone to launch the ESRM implementation manual and initiate momentum for sustainable banking by addressing environmental and climatic risks. Before we start the conference, I would like to request the participants to fill the survey for today's conference and document your feedback, which is very important. It will help us to improve future events such as this. Thank you very much on that. We are honored to have with us the Governor and senior leadership of the State Bank of Pakistan, notable speakers from Pakistan and abroad, who will give the welcome remarks, introduction and keynote address, followed by our first session on ESG integration in the financial sector, and our second session focused on climate finance, climate risks, and climate-related disclosure. Without further ado, I would like to invite Mr. Zishan Ahmed Sheikh, Country Manager, Pakistan Afghanistan at the IFC, to give his welcome remarks. Mr.
Good morning, everyone. It's very nice to be here, and it gives me a lot of pleasure to welcome you to this National Sustainability Banking Conference, jointly organized by IFC and the State Bank of Pakistan. I want to begin by taking the opportunity to thank Governor Jameel Ahmed, Deputy Governor Seema Kamil, ED Samar Hasnain, the State Bank team, for their partnership with IFC over the last couple of years, which has really culminated in today's event and this manual that is being launched today. I also want to acknowledge the government of Japan for their support in this work that IFC and the State Bank has undertaken, and in particular to Counsel General Toshio-san for your presence here today. As some of you know, IFC has been active in Pakistan for a number of years and has a portfolio today of around $1.7 billion. And we have big plans to try and increase that in the coming years. And for us, the sustainability agenda, the climate agenda is central to everything we're trying to do in this country across all sectors. IFC has a history globally, starting almost 20 years ago in 2003 with the development of ESG standards. So the first one we started off with was Equator Principles, which many of you will be familiar with. We then helped develop the Green Bond Principles, which resulted in capital market development around green financing and led to green bonds, I think 10 years ago, back in 2013, the number was closer to $10 billion. Today, it's $500 billion. We then transitioned on to, in 2019, setting up the Impact Investment Principles. Some of you will be familiar with that, which is a set of principles that encourages investment towards private sector investment towards undertakings that have measurable positive social and environmental impact. IFC has also set up the Sustainable Banking Finance Network, SBFN. Some of you will be familiar with that. It's a global forum for regulators, central banks, and entities involved in environmental-related regulation. It's something we have a secretariat for in DC, and I'm pleased to say that the State Bank of Pakistan is actually a very active and progressive member of the SBFN. As an institution, we view climate-related risks, environmental and social-related risks as fundamental, and something we view as a dramatic disruptor. We think it will have an impact on the economy, on the financial sector, and on the private sector. So for us, the assessment of that risk is core to what we do. It's a philosophy we follow. For everyone who's here from IFC will know, in our internal analysis, we spend a lot of time and energy on these risks, and that's the same ethos we are trying to develop and encourage in other institutions through exercises like this. That being said, we also see climate change and the related need for investment as an opportunity. And it's something, like I said, we're focused on globally as well as in Pakistan, to sort of this term build back better that I think many of you would have heard, to try and transition to more sustainable and more environmentally responsible investments. It's something that is core to what we're trying to do. And Pakistan is no different. We have a number of engagements ongoing. What you have here today in terms of the launch of this manual is an example of that. The team that is in town is engaged in extensive trainings. We are in conversations with other entities, with PSX, SECP, and others to try and develop a framework around sort of mainstreaming this sort of risk management around ESRM. And we hope this is an area that we can add value in going forward. I'm particularly pleased that with the launch of this particular manual, the effort that's gone into it, IFC has managed to pull its experiences and lessons learned from this activity across the world, and then with the manual that will be launched today benefits from a lot of that. And that really is core to our value add in a country like Pakistan, to bring that international knowledge and that know-how. So today is a good example of that. I think you will all be familiar, there's been a lot of reports that have recently been launched in terms of the impact of the recent floods. The PDNA document, which uses or quotes numbers between 16 billion and 30 billion, depending on how you calculate the loss. I think all of those go to say, or go to emphasize the need for this being a tangible risk around, so environmental and social related factors being a tangible risk and one that needs managing. Last night, I was actually reading a report that IFC will be launching at COP27 in 2 days. It's called the Country Climate Development Report, CCDR. You will hear about it in the next 48 hours or so. One of the key takeaways from that report is that if Pakistan, being one of the most exposed countries to climate change, if it does not or is not able to manage that through better ENS risk management and investment in climate-related infrastructure, the potential impact on GDP growth by 2050 is up to 20%. It's a very, very significant number and really brings home why activities like this and the work that everyone here is doing in this space is so important. You will hear from a lot more technical people in a much more cohesive way about the work that is ongoing. So I'll stop on that. I just want to close by again thanking everyone for being here today on a national holiday, which was unexpected for a lot of us. So thank you all for making time. And on a day in which I'm told there's a big cricket match, so we'll try and wrap things up before then. But really appreciate everyone's time and effort for being here. To State Bank, once again, for their partnership, to the government of Japan for their support. And I also want to acknowledge the IFC team that has been involved in particular way, and FIFA, who are sitting here, who've traveled from other parts of the world, and Dan Shepard, who is also here, for really making time and being here. I'm grateful for you for the work that you're doing in Pakistan. So I look forward to a very engaging discussion, and thank you all for being here. Thanks.
Thank you, Mr. Sheikh, for your insightful words. Now I'd like to introduce Dr. Afifa Rehana, Senior Environment and Social Specialist of IFC, to introduce the ESRM Implementation Manual.
Thank you, Tanya and Zishan, for setting the stage. Can I have my slides? Okay. So before I get started, just to give you a bit of history of why we actually embarked on this work. Did it just come about from the thinking that climate change is now an issue, let's work on this? It's actually not that. Decades of work of the central bank, the bankers, and IFC has gotten into it. So in 2010, we actually launched the first ESRM guideline for Pakistan jointly with Pakistan Bankers Institute, PBA. And in 2016, we did a countrywide baseline study to find out where are the challenges, why are banks not introducing ENS risk management in lending when there are so many issues related to environment and social. We found out that central bank needs to play a decisive role in this, otherwise it's not going to get anywhere. That's when we started discussing with SBP, and in 2015, SBP also joined the SBFN, which is the global network for central bankers or bankers association. So in 2017, central bank launched the green banking guideline, and you're familiar with that. And in 2020, our project started. As a result, you are seeing the ESRM implementation manual, which is not done in isolation. This is part of the work that has been going on since 2010. So this is just to give you a snapshot of Pakistan. We have air pollution, health and safety issue in shipbreaking, water pollution, flood, child labor issues. These scenarios are common in the Pakistan industrial arena. These are some of the quick stats. I won't go through all of them because of time, but one thing to notice is there are many litigations pending in court, and these are your clients that might have been taken to court for environmental and social reasons. There are instances where factories have been shut down due to environmental non-compliances. So when these sort of things happen, definitely banks need to think that our industries, any impact at their end, negative impact, has an impact on your bottom line. So why businesses need to care for the environment? First and foremost, compliance. Pakistan has laws and regulations. If businesses want to operate in this country, they'll have to comply with local laws and regulations. We have seen in many instances, cost saving and loss reduction comes in hand. So if a company is doing their environmental due diligence properly, in the process they also save cost and their loss is reduced. For access to new markets, I mean, you won't have to tell this to the textile owners. They know that if they want to sell in international market, in North American, European markets, they'll have to be compliant. Without compliance, they're not getting anywhere. Reputational risk, of course. So businesses don't care for the environment for the goodness of their heart. And they do it for pure business reasons. And that's the angle we are taking. Bankers should also look at environmental and social risks from a core credit risk perspective and not from a do good, feel good type of thing. It doesn't work that way anymore. So when we talk about environmental pollution, we are talking about air pollution, water pollution, land contamination, destruction of natural habitat, depletion of non-renewable resources. And these are very common scenarios. You have seen some very compelling scenes of the flood. Climate change is becoming real, natural disasters are happening, and there are financial implications on infrastructure, home, and insurance. So just to explain the climate change aspect a little bit and how it can weaken the financial performance of loan and equity. So if there is any flood event which has disrupted the supply and demand because of road communication cut, there is an impact on the industries that you have financed. Asset performance decreases with negative impact on revenue. So for example, telecom towers in the coastal area which might come down because of tornadoes, cyclones. Agribusiness was very badly hit during the recent flood. Operation and maintenance cost may increase, sea level may rise, and the most commonest example of that is we see that the seaside hotels are now seeing bigger waves come up and impact their infrastructure. So they now need to build sea walls, they need to take care of the furniture, the carpets, and whatever they have that get impacted by seawater. So the operation cost goes up. Insurance cost increases. I come from Bangladesh, so this is a common thing. We get flood every year. Now, if you go to an insurance company and you ask them, can I get a flood insurance? They don't have it. They're not offering that product in Bangladesh. Same goes true for other types of risks as well. Capital expenditure increases. Of course, if there is flood, textile mills will have to have higher pallets to save their raw material. They'll have to have deeper pipes if there is drought-like situations. Staff health and safety and productivity. The people, the workers that live in the area that are impacted by extreme events, their productivity might fall if there is climate impact. Loss contingency projection needs to increase, and asset depreciation rate increases, of course. And country risk may be aggravated too because of climate change, and it can result into internal migration. When we talk about social risk, these are the couple of things that we are looking at. So basic human rights, land acquisition and involuntary resettlement, community health and safety, indigenous people, and tons of labor issues. Worker issues are very prominent in Pakistan. Remuneration and wages, working hours, health and safety. There has been many, many fire incidents in the Pakistan factories where people have been killed due to lack of fire safety. Child labor, forced labor, of course, and freedom of association. So why is sustainable finance important for banks? First and foremost, litigation shutdown leading to increase in the non-performing loan. If there is anything happening at your client's end, that has an impact on the payment of the loan. Decrease in the value of collateral. Collateral is the most common type of things that banks take, land collateral. If that piece of land is contaminated, then definitely you're not going to get premium price by selling it. And if it is a contaminated piece of land, sometimes you might be asked to even do cleanup, so that might add additional cost. Disruption of operation at the client's end, reputational risk and damage to brand promise. Of course, no one wants to be tagged as a bank that's hurting the environment. Pressure from investors and government. You know, you have a very active climate change ministry. There are certain things that are coming up in the regulatory space. And of course, international commitments. There are global banks that have signed up to Equator Principles, climate principles, so you're doing sustainability-related things that are important. So challenges faced by relationship managers and credit officers. It's easier said than done. One of the most important challenges is the perceptual barrier. A lot of banks think this is not important, not related to banking. This is something that's within the realm of the climate change ministry. We shouldn't have anything to do with it. That's actually not the case. Climate change is a myth. Of course, that has been busted this time round with the Pakistan flood. There are, of course, institutional barriers, like lack of valid data. So one of the reasons why we have to motivate banks to pick up sustainability is if you had an MIS system which could capture the data, how much non-performing loan you have in your books due to environment and social reasons, then this would have been an easy sell. But the MIS doesn't capture non-performing assets by the reason. So if you ask a banker, how much have you lost due to environmental and social reasons, they would say none. But if you ask them, has any of your client been taken to court for non-compliance? Yes, many. Has any of your clients lost their contract in international market because they were non-compliant? Yes, there are many cases. Have they been fined by the Environment Protection Agency? Yes, they were fined many times. So these cases are common, but your MIS system is not capturing that data. There is a misalignment between the RMs and target and the ENS requirements. RMs are given target, you'll have to bring business, but they're never told that you cannot bring in unsustainable businesses into our books. So there are policy and regulatory barriers, and of course there are skill and knowledge gap. These are new areas. Only knowing that environmental and social risks are core credit risk is not enough. There has to be procedures in place. There has to be ways of doing things. So just to give you a sense of the sustainable banking, State Bank of Pakistan's Green Banking Guideline is the mother document. We have received a lot of questions that what happens to that? Are we totally abandoning that and now going to implement the ESRM implementation manual? It's not like that. So the Green Banking Manual is the mother document. It has 3 components. One is green finance, the second is own impact reduction, and the third is ENS risk management. So we are only looking at the pillar of the ENS risk management, and this manual actually addresses that bit, that pillar only. We have a threshold-based approach, so it's not like same sort of due diligence needs to be done for all types of projects. So if you look at it for retail microfinance, these are low risk, and nothing actually needs to be done except for looking at the exclusion list. Only for medium, you'll have to do a due diligence. For corporate, yes, and for project finance, there is deep due diligence that needs to be done. There is a threshold for IFC performance standard also. So performance standard requires any project that is above $10 million. So it's only the bigger projects with great environmental impact, that's where you need to apply IFC performance standards. For the SMEs, for the medium and corporate, there is a very light touch due diligence. It's much more simplified and straightforward. So this slide is actually very important because when we started with the understanding that the concept of sustainable finance is new. The banks don't have the required skill and they don't have the resources. They are challenged in many ways. So this implementation manual actually addresses these challenges. So you will find it very nicely written in the manner that would be readily usable by the bankers. So what we are suggesting is this framework that the banks need to recognize ENS risk as core credit risk. And then they need to have capacity in place so that it will be implemented in your bank. The procedures are quite straightforward. When you get a loan application, you'll have to first see what type of transaction is it. Is it a project finance transaction or an SME transaction? Because the due diligence differs the way, depending on the type of transaction. And then you do a due diligence, which is also pretty straightforward. The checklists and tools have also been introduced. And then after you give out loan, you go and monitor the client, whether the client has done what they promised to do when the loan was being given out. That's about it. And then you report to central bank about your process. This is the framework that we have promoted all through the implementation manual. You will see repeat reference to this process in the manual. So just to give you a bit of sense about what is in the manual, in the intro section, we have clearly identified that this is not applicable for loans that have been restructured or it has been tagged as non-performing asset. You won't have to go back and do all the loans that you have given so far. So it is only for new loans that are going to come up after the launch of the implementation manual. Social risk and climate risk has been introduced. There are auto-generating templates where it's an Excel sheet based on the answers that you choose. It will auto-generate a risk rating. So that has been introduced. The ESMS, as I told, the framework. The implementing ESMS, we have identified roles and responsibilities. So there has to be board oversight, senior management commitment, and identify resources within your bank. Budget will have to be assigned, trainings will have to be done. So we are also organizing trainings as part of this project. In the annex, we have included the exclusion list, the ENS risks in detail. What sort of risks should the banks look so they don't have to go elsewhere and find the information? The annexes are quite rich. All the tools and thresholds have been introduced in the annex, and national laws and regulations related to environmental and social issues. For tools, we have the ESDD checklist, as I said, for SME and corporate, project finance questionnaire, which is more in-depth due diligence. There are corrective action plan templates, and we also have ESMS templates, because banks will be required to develop their own ESMS. The template is also provided in the implementation manual. And in the end, there is also a monitoring and evaluation framework. Until and unless you go and monitor what your clients are doing, you are not closing the loop of the due diligence. So there are templates for that also. And one thing important is for your reporting, you will have to be monitoring, because you will be reporting to SBP. You might also have reporting requirement to your senior management or board. So this is a snapshot of the roles and responsibility. The Green Banking Office would be required to develop the policies and procedures. Relationship managers are the face that the clients are going to see. So they are going to interact with the clients and collect all the information. Credit would be fully in charge of quality control and making sure that things happen in the right manner. No risk is not identified or not assessed or not managed adequately. Senior management would take overall responsibility of implementing. They will opine on high-risk project, and they will assign resources. The board of directors, of course, they will have to approve the policy and ensure that Green Banking Office has access to them. And finally, the legal division will have to see that the right covenants are in the loan agreements once you have done the due diligence and have identified the gaps. The Green Banking Guideline is inbuilt with the monitoring and evaluation framework. So this is the parameters on which you will have to report as a bank to the central bank once a year. There are some qualitative indicators and some quantitative indicators. So the main point here is until and unless the banks do certain things, there wouldn't be nothing for you to report. So if you are not doing it, then you won't have anything to report on. So monitoring and evaluation is important, but at the same time, there has to be some process around it, some structure around it. You'll have to have an MIS system that would be able to collect these information. Otherwise, reporting at the end of the year would be very difficult. There is, of course, your annual report, but some of the banks have gone ahead and have done separate sustainability reporting also in some countries, in some banks. So common practice in many countries, something that you can probably think about. But when it comes to sustainable reporting, there are 4 areas that you might want to keep in mind. One is ENS risk in lending, and the implementation manual is related to that. The other thing is green financing. You might have a portfolio of renewable energy, energy efficiency financing, climate finance portfolio. The third area is your internal carbon footprint reduction, which is you might go for paperless banking, you might go for a solar-powered ATM machine, reducing your energy use, reducing the waste use within your offices. The fourth aspect is CSR activities related to environment. So these are some of the parameters on which banks are considered sustainable. You might want to look at it from an overarching point of view. But the implementation manual is only related to the ENS risk management aspect. Now that we have so many CEOs and CROs in the room, I thought it might be useful to set the expectation. First and foremost, you are the head of the organization. Please set the vision, and the messaging has to be very clear. Until and unless senior management is committed and that message doesn't come out clearly, it becomes very difficult for the rest of the team to actually implement. Assign roles and responsibilities, ensure procedures are in place to identify and manage ENS risk, and it should be integrated with your credit approval procedure. As I said earlier, what's not done cannot be reported, so you'll have to have certain reporting parameters, MIS system. Communicate with the key stakeholders. Very, very important to have your clients know that you are a bank that is going sustainable. You have certain rules and regulations around it. Connect the dots. Most of the time, the risk department works in a silo, and there is the business department that works in another direction. But actually, if you have identified risk in a client factory, that is an opportunity to finance to make the changes. So if you say that the client is polluting the air and a scrubber needs to be installed, be the bank to finance that scrubber. So you need to make that connection. Also, during COVID, a recent study indicates that stronger ESG performance is likely to lead to lower declines during market downturns. Banks that have been sustainable have suffered less due to less controversies and all during the time of COVID. So that is also there. Some of the common pitfalls to avoid: a lot of training being organized, you have the skill and capacity, but you don't have the policy in place. That probably will not work. So have the policy and then the skill and training. Senior management buy-in, very, very important. Stakeholder management, I've already talked about it. IT infrastructure will have to be strong enough to capture the ENS risk, manage it, and also capture key parameters for reporting. And you will need to have a champion within your bank if you want to make this a reality. There are certain implementation challenges, and we will need to move away from the existing mindset. Over-reliance on permits and license is a common thing. We only try to collect the NOC, which will not be the case this time. ESRM implementation manual wants bankers to actually do the due diligence of a project when they visit the project. So over-reliance on permits and licenses will have to be reduced. Lack of documentation in loan files. You will see loan files where nothing about environmental and social due diligence, because nothing has happened actually. So those documents will now have to be in place. If you have collected the ESIA, EIA, that needs to be put into the loan file. ENS gaps identified but not communicated to the clients. There are certain clients who have the ENS due diligence done. They know high, medium, or low risk, but nothing has been communicated to the client. So that doesn't close the loop. Lack of monitoring, lack of skill, those are all there. So my last slide, what next? First and foremost, we have 3 training programs coming up in Karachi, and then more coming up in Islamabad and Lahore. So please take advantage of these trainings. We are also training trainers, consultants, and bankers. The ESRM implementation manual is going to be piloted in 2 commercial banks, so that's coming up. And before the requirements are made mandatory, you need to set up the policy and procedures in place. There is an upcoming integrated ESG project coming up, so there will be a lot of follow-up work on this. And the most important one, which I wanted to mention, is a roadmap development, which we might do with the central bank, because you cannot have different activities going on related to sustainability. It all has to be part of a broader roadmap so that you know what needs to be done when, and there is proper synchronization of events. If you have any questions, we cannot take it in such a big forum, but please do reach out to us. We would be happy to answer. Thank you.
Thank you, Dr. Rehana, for the introduction to the ESRM implementation manual and for keeping such efficient time. Next, I would like to invite Mr. Daniel Shepherd, ESG Manager of IFC, to share the global perspectives on environmental social governance.
Good morning. Thank you all very much. It's an absolute pleasure to be here today. As mentioned, I'm going to give a little bit more context of how we got here, so adding a bit to what my colleague Afifa has mentioned, as well as what Zishan had covered. But firstly, my name is Dan Shepard. I'm the Environment, Social, and Governance Manager at IFC, covering the Middle East, Central Asia, Afghanistan, Pakistan, and Turkey region. I've been with IFC for a dozen years now, but new to the MCT region. Previously, I was based in Johannesburg covering the Africa region, and I mentioned that in the context of some of what we've seen related to climate, which I'll add in a second. But how we got here, what's been our journey to get to where we are today in this important milestone? So over the past 2 years, 7 working groups meetings and 2 steering committee meetings have taken place. They've been organized by the State Bank of Pakistan, IFC, and commercial banks. IFC also supported the Pakistan Bankers Association to organize a dedicated session with banks' chief risk officers to solicit additional inputs. These extensive discussions and consultations reviewed the key concepts of the ESRM and made sure valuable feedback and comments were considered and reflected in the final manual. I thank the ESRM Steering Committee, led by the Deputy Governor Seema Kamil, for your leadership, Mr. Syed Samar Husnain, Executive Director of Development Finance, for guiding the working group discussion, and Mr. Yassine Anwar, the former SBP Governor, who played a key role as advisor to the IFC project team. I'm pleased to note, as mentioned by Afifa, that with IFC's support, a key set of key performance indicators are also included in the manual to introduce a monitoring and evaluation mechanism, as she went through, which will help SBP, the State Bank of Pakistan, and banks to track, report, and facilitate continuous progress on ESG performance in the banking industry. I want to highlight 2 key features of the IFC support for Pakistan banks. First, the introduction of climate risk consideration through the launch of the ESRM implementation manual, and secondly, capacity building through the training of trainers. What we have seen, the catastrophic flooding here in Pakistan that took place earlier this year is not a standalone event. As I mentioned, I was previously in South Africa. We saw similar catastrophic flooding in the KwaZulu-Natal region of that country. And myself, who's a native Californian, saw what over the last decades what have happened in terms of intensity of wildfires. So this is something that we need to factor in terms of climate risk. Sadly, it's not going away. Moreover, for the 5th year in a row, the World Economic Forum has assigned environmental risk, including climate action failure and extreme weather, as the top global risk. The ESRM implementation manual provides clear guidelines to banks on how to identify and manage climate-related risks. This is the very first time that climate risk due diligence for banks has been introduced in the country. The ESRM implementation manual is very timely. Right now, at this point in time, we have the COP27 taking place in Egypt. This is a significant and hopefully momentous moment in terms of adhering and incorporating climate risk into our everyday activities. I look forward to the video messages from Ms. Shari Rahman, the Minister for Climate Change. As Pakistan itself steps up on climate change mitigation and adaptation, our work today is intended to better prepare the banking industry to adjust to this new norm. Although Pakistan itself is rich in natural resources, the country still depends on fuel imports for power generation, and the current mix of around 70% non-renewables not only produce more and more greenhouse gas emissions, but also pose a heavy burden on the economy and substantial risks to facilitating sustainable investments. There continues to be a huge potential to grow the renewables energy market through hydropower, wind, and solar, and we've seen a lot of that growth, and some of it with support from IFC. IFC itself, through our ESG advisory program, has worked in Pakistan for the last many years in developing a comprehensive approach for developing hydropower sustainably and cheaper and other cleaner energy sources. A key part of this has been raising the environmental and social standards and providing technical guidance to hydropower companies in Pakistan, and again, including some project for which IFC itself has financed. As mentioned, from here, IFC will support Pakistan banks to build up the capacity to implement the ESRM implementation manual. A key part of that in the training is this emphasis on developing an environmental and social management system, or ESMS. And ESMS places significant emphasis on a bank's ENS policy and capacity, as well as procedures for identifying, assessing, managing, monitoring, and reporting ENS risks. A key part of a bank's ESMS, the environmental and social due diligence, or ESDD, which was mentioned in the slides from Afifa, which encompasses the identification, assessment of a project's ENS risks, as well as proposed mitigation measures in the form of an environmental and social action plan, ESAP. These are all lots of acronyms, but important ones. Financial institutions often require this action plan as a condition for financing, together with other ENS performance monitoring. As countries grapple with such environmental and social challenges, sustainable finance has become a powerful mechanism to help them improve resilience and identify new business opportunities. So on the one side, the risks, on the other side, of course, the opportunities. Going forward, IFC aims to broaden our support and engage with key stakeholders, including the Securities and Exchange Commission of Pakistan and the Pakistan Stock Exchange, to help encourage sustainable investing and promote good ESG practices as tools for growth of the capital market here in the country. It is wonderful to see this progress so far in this important milestone that we're at today, and we look forward to continuing to support sustainable finance here in Pakistan. Thank you very much.
Thank you, Mr. Shepherd, for your topical remarks. Next, I would like to invite Mr. Khwaja Aftab Ahmed, Regional Director of IFC, to provide IFC's perspective on environmental and social governance.
So, Governor Jameel Ahmed, Governor State Bank, Seema Kamal, Deputy Governor, Dr. Shamshad Akhtar, Mr. Yasin Anwar, distinguished guests, CEOs of banks, senior management. It's a pleasure to see many of friends after a very long time. So it reminds me 25 years ago when I joined IFC, and I was covering real sector at that point in time, and the target was to bring more business. When I used to go to some of those clients, and one of our requirement was to install effluent treatment plant, and the response with many of the groups used to be that it's a cost burden to us. So all our competitors, they don't have effluent treatment plant, they're getting the same orders. So it adds on a very tight cost structures, 10, 20, 30 cents per unit, it's unsustainable. And there we saw the difference between followers and leaders. The entrepreneurs which were proactive versus entrepreneurs which were reactive. And few years down the road, the Levi's of this world, the Calvin Klein of this world, they came up with a very clear guidance to get order from them. These are the requirements, and those requirements were completely aligned with what IFC or maybe other international financial institutions were promoting. And in those time, at that time and age, so those people who are proactive, they managed to increase their orders many-fold, because not only in Pakistan but other parts of developing markets doesn't have those clean, environmental friendly plants. So when I see banking sector is the most sophisticated sector within an economy, you find the best skills, best resources in banking sector. So, and a clean, environmental friendly industrial setup cannot be established without banking sector joining hands with that. So IFC as an institution has struggled over the last many decades in terms of where we started. Initially within IFC it was something good to have versus something which is very, very important. So in my previous job, like let me introduce myself. I'm Aftab Ahmed, Regional Director for Middle East, Pakistan and Afghanistan. Before that, I was Global Head for Investment and Credit Risk, IFC Washington. And during that time, I was co-head or co-global head for Environment and Social Department also in IFC. So for IFC, it's relatively easier to manage credit risk because you do a due diligence on credit risk. Even if you make a mistake on credit risk, you lose some money, which institution like IFC can afford. But when it comes to, we are most sensitive when it comes to reputational risk. And this is one of the areas, environment and social governance is one of the area where most of our ombudsman cases, most of NGOs come after these international institutions on ESG issues. Just to let you know that we were sued by one of the clients, which was the biggest case as far as World Bank Group is concerned. We were sued in New York, and that was the biggest issue within IFC. Everybody was shaken off, and that also pushed us to tighten our environment and social. So today, I think it's a very opportune time that COP27 is happening in Egypt, where thousands of participants, to just give you a number, 35,000 participants from all over the world are joining with 2,000 speakers. So, and have a big Pakistan delegation as well, led by Prime Minister Shehbaz Sharif. And one of the reasons Minister Sherry Rahman could not join because she's part of the delegation. And I'll be going late night to Egypt, Sharm el-Sheikh, to join launch of CCDR report, Country Climate and Development Report for Pakistan. So that is a big initiative taken by the World Bank Group in terms of the CCDR reports in many of the large developing countries. And that CCDR report set a path forward in terms of both adaptation and mitigation strategy, how much amount is required over the next 5-10 years in terms of both from the public sector and private sector perspective. So, and these strategies, whether it's adaptation or mitigation, cannot be implemented without deep participation from the private sector. And private sector participation lot of that has to come through the financial institutions. So few pitfalls which we have seen in IFC as well, that initially ESG department was like a silo within the institution, that okay, it's a tick box, you have to go through this checklist, you do a due diligence, until unless the whole organization really took ownership of ESG. Now, if any investment officer is hired in IFC, it's part and parcel of the training program, our induction program, our risk management program. ESG risk is part and parcel of that, because we wanted this ESG to be part of DNA of each and every individual who joined IFC. Otherwise, if you make it a silo, it becomes more academic exercise than real contribution or value addition. One advice is, you get a lot of good people when you hire your investment people, when you hire corporate finance people, when you have a higher retail. Please focus on hiring the best talent for ESG. Don't make it somebody sitting somewhere and doesn't have a job, transfer that person to ESG department. Hire your best people in ESG, develop the best department and give them incentives. And complete alignment of interest, as Afifa also mentioned, complete alignment of interest between people who are on the front line and in ESG. It should not be just a back office. So, a very strong career development path for ESG staff within the banking community. Otherwise, it will just be, we'll end up in a back office. What I see going forward, like in the past when all these big buyers came up with strict requirement, I think the way things are moving, a lot of these international banks, the which confirms LCs, which provide liquidity. I think there will be slowly moving in that direction in terms of having ESG requirement, so that banks who comply with those requirements will get certain facilities. Otherwise, it will be difficult to. So if our banks, because these are on a voluntarily basis, so if banks in the country wants to take a leadership role, I think they have to come forward, do it on a voluntary basis. Don't end up as just an academic exercise. So my plea to all of you, the leadership team sitting here, please take it very, very seriously. Please implement it in the real spirit, so that all the banks have work on a level playing ground. One additional point is that there's a lot of donor money available. If you move in that path, that's green climate fund, that green environment fund, a lot of donor money is available. If you become proactive, and if any of the banks or many of the banks take a leadership role in terms of setting path of other banks, so we'll have a lot of opportunities in terms of attracting donor funding as well. One more thing I think we want to do in this region is to establish the first green bank in the region. We're talking to few in different countries, and my invitation to some of you is, if you want to move in that path, it's a journey. You can't be a green bank tomorrow or 1 year down the road or 2 years down the road. It's a very good message from the country. So we are willing to help you in the green banking initiative. So think about that as well. So next, and I was surprised that in COP27, there are participants, both public sector and private, from all over the world. And I haven't seen participation from Pakistan. So next COP28 is in UAE. So I would like to see a lot of you being there and taking a very active role in that COP28. We'll be co-hosting with the World Bank, and we'll let you know much in advance, so that there are sessions, there are panels where we can represent Pakistan and see what good work is doing. So the recent natural disaster was a wake-up call for all of us. So from that perspective, of course, IFC, World Bank, and other multilateral will play a significant role in terms of damage and losses and repair. Large facilities would be required on adaptation methodology. So my plea to all of you is join hands with us, and so that we can develop sustainable infrastructure, look into transactions which add to greening of the economy, and IFC and other institutions are there to help you. Thank you so much. And finally, thanks to our partners, Central Bank of Pakistan, State Bank of Pakistan, Council General of Japan, my colleagues coming from AFIFA and coming from different parts of the world. Thank you all. Thanks.
Thank you, Mr. Khwaja Aftab, for your valuable address. Now I would like to invite Mr. Jameel Ahmed, Governor, State Bank of Pakistan, to deliver the keynote address and launch the ESRM implementation manual.
Bismillah ar-Rahman ar-Rahim. Dr. Shamshad Akhtar, Chairperson Pakistan Stock Exchange, and our former Governor, Mr. Yasin Anwar, Senior Policy Advisor IFC, and our former Governor, Mr. Toshio Udegri, Consul General of Japan in Karachi, Khwaja Aftab Ahmed, Regional Director IFC, Zishan Sheikh, Country Manager IFC, Seema Kamal Sahiba, our Deputy Governor, distinguished guests, ladies and gentlemen, presidents of many and CEOs of many banks I can see, so I acknowledge them also. It gives me an immense pleasure to address this esteemed gathering at this conference on sustainable banking, organized jointly by State Bank of Pakistan and IFC with the support from Government of Pakistan. This conference aims at creating awareness about risks associated with climate change to the financial sector and provides a platform for deliberating and identifying tangible actions to effectively mitigate and manage these risks. I would like to express my gratitude to both IFC and the government of Japan for joining us in organizing this very important event. Ladies and gentlemen, I was part of the recently concluded IMF and World Bank annual meetings held in Washington, D.C., and one of the spotlight discussions was regarding the threats of climate change to the financial stability. A key takeaway from these sessions was the increased realization that climate change is a global issue, which urgently requires a coordinated global response. The World Bank has established a new fund called SCALE, which is Scaling Climate Action by Lowering Emissions for Developing Countries, which was launched yesterday at the COP27 event in Egypt. The detrimental impacts of environmental degradation and climate change on economic growth are real. We all can observe that the climate change is having its toll on Pakistan. The weather patterns are changing, and recently we have experienced some abnormally high downpours and flooding never observed in our history. 1/3 of our country was underwater, and 1 in every 7 persons was displaced. Ironically, there are variations across countries in how the climate change affects the weather patterns, causes flash flooding, droughts, melting of glaciers, and rises in sea levels. Pakistan is ranked among the top 10 countries most vulnerable to climate change. Ladies and gentlemen, the transition to a low-carbon green economy requires a shift in production and consumption patterns. In this context, the financial industry can play an important role by mobilizing the financial resources needed for the transition. Globally, innovative financial instruments such as green bonds have been well received as they play a vital role in transforming economies through sustainable and responsible financing. According to Climate Bonds Initiative, the cumulative issuance of green bonds has exceeded $2 trillion. To support such initiatives and facilitate transition to a lower carbon footprint, financial regulators are striving to create enabling conditions that make green financing an attractive opportunity for investors and businesses. To this end, central banks across the world have joined hands to strengthen the global response required to meet the Sustainable Development Goals and Paris Agreement. Central banks in emerging economies like China, Bangladesh, Indonesia, Mongolia, Turkey, among many others, have already launched national policies, guidelines, or roadmaps focused on sustainable banking. Further, central banks are also incorporating adverse weather-related scenarios in their stress testing of banking sector to evaluate the resilience of financial systems to adverse shocks. State Bank of Pakistan has also undertaken important initiatives under the umbrella of green banking to ingrain sustainability considerations in the financial sector. State Bank has also become a member of Sustainable Banking and Finance Network in 2015 and is leading the initiative of promoting sustainable banking. SBP has introduced renewable energy financing schemes both in conventional and Sharia-compliant financing modes. The objective of this scheme is to finance clean and renewable energy projects to meet the growing electricity demand in the country. I am delighted to share that scheme has made remarkable progress by providing financing to more than 2,200 projects with a cumulative capacity of almost 1,600 megawatt by August 2022. The total outstanding financing under this scheme was 95 billion at the end of August 2022. On the regulatory side, SBP has issued green banking guidelines in 2017 with the objective of, number one, to reduce vulnerability of financial institutions from risks arising from environment. Number two, facilitate and push banks to fulfill their responsibilities for the protection of environment. And number three, ensure required financing is made available for transformation into resource-efficient and climate-resilient economy. Ladies and gentlemen, SBP has been vigilant in monitoring the progress of implementation of these guidelines by banks and DFIs. And I am happy to share that the progress so far is promising. All banks and DFIs have established green banking offices and nominated chief green banking managers to supervise green banking activities. 31 banks and DFIs, which is 97% of total, have formulated green banking policies that have been approved by their respective board of directors. These policies include policy statements to environmental risk management, facilitation of green businesses, and reduction in their own carbon emissions. 27 banks and DFIs have integrated environmental risk assessment procedures with their credit risk assessment procedures to better evaluate and manage the impact of environment and climate changes on their credit portfolios. 16 banks and DFIs have established strategies for facilitation of green businesses by including a policy statement for allocating funds to businesses that intend to lessen their carbon footprint. 18 banks and DFIs have established annual impact reduction targets, including well-defined key performance indicators and strategic plans for achievement of these targets. So we can see a lot of progress has already been made by the banking industry, but as we all know, much more work needs to be done. While considering a progress has been made towards adopting green and sustainable banking guidelines, degree of implementation, however, also varies from institution to institution across the industry. Moreover, there is lack of standardization in assessing and identifying environmental risks. I believe setting minimum standards and benchmarks will help ensuring a faster and broad-based progress. To bridge this gap, I am glad to share that today SBP is issuing environmental and social risk management implementation manual for banks and DFIs. An exhaustive approach has been adopted in the development of this manual, and its contents have been finalized after thorough consultations with the industry. The objective of issuing ESRM manual is twofold. First, to establish a standardized benchmark for environmental and social risk management and compliance of green banking guidelines. Second, to focus on social risks like child labor, forced labor, safety and health issues, which will align green banking guidelines with international best practices and best practices on environmental and social risk management. Adoption of this manual will be voluntary for a period of 3 years, allowing banks and DFIs adequate time to establish and integrate their environmental and social risk management systems with credit risk management procedures in a phased manner. The manual will help all banks and DFIs in developing a roadmap for comprehensive implementation of the green banking guidelines. Although the implementation of the environmental and social risk management manual will be piloted in 2 voluntary banks on a fast-track basis, I will encourage the entire banking industry to take full advantage and use of this manual for establishing ESRM systems and procedures in their respective institutions. State Bank, along with the IFC, will coordinate and continue to provide necessary support and guidance at every stage of ESRM implementation. I am also happy to share that our next milestone will be the development of a national green taxonomy in coordination with the relevant stakeholders. This will facilitate financial institutions in identifying and financing green projects and reporting their green finance portfolios to SBP and the public. This will also lay out the groundwork for development of green bonds and sukuk market in Pakistan. In my concluding remarks, I would like to reiterate that financing for sustainable development has a pivotal role to play in achieving resource-efficient and climate-resilient economy. At the same time, given strong macroeconomic linkages with the real economy, the role of environmental and social risk management is critical for reducing vulnerability to financial system stability. Well-coordinated and concerted efforts are needed to mitigate and manage the risks associated with climate change. SBP will continue to analyze climate-related risks and opportunities and devise mechanisms for ensuring effective supervisory role to achieve a sustainable financial system in Pakistan. Lastly, I would like also to thank the SBP and IFC teams for putting this event together and making this to happen today. I wish you an interactive and productive session ahead. Thank you very much.
Thank you, Mr. Jameel Ahmed, for your insightful keynote address. May I request the speakers and panelists to join the Governor for a group photo on the stage as well? Thank you very much. We are now taking a 20-minute coffee break in the adjoining hall.
Sustainable banking is the banking industry's response to achieving sustainable development goals. A growing number of central banks and financial institutions from around the world are adopting policies to manage environmental, social, and governance risks arising from financed activities. The failure to consider environmental and social risks in a bank's investment strategies can seriously undermine projected financial returns. Disruptions, destruction of businesses, fines, litigations, and losses due to environmental or social reasons are core credit risks for the banking industry. Pakistan is among the top 10 countries most prone to the effects of climate change. Since 1998 alone, Pakistan has faced over 150 extreme weather events and man-made disasters. In partnership with the Government of Japan, State Bank of Pakistan and IFC have developed and launched the ESRM Implementation Manual for the Pakistani banking industry. This manual draws on international best practices and will help banks mitigate environmental risks like pollution and loss of biodiversity, address important social issues like child labor, labor rights, land acquisitions, indigenous people's rights, health, safety, and security. managing environmental and social risks will help banks avoid litigations, fines, shutdowns, or any other disruptions at the borrower's end to prevent an increase in non-performing loans. It will also help preserve our natural assets and resources. With a concerted effort by the banking industry, we get to pass the many bounties of our nature's abundance to the next generations, with the certainty that the Pakistani people prosper and progress forever and always. Sustainable banking is the banking industry's response to achieving sustainable development goals. A growing number of central banks and financial institutions from around the world are adopting policies to manage environmental, social, and governance risks arising from financed activities. The failure to consider environmental and social risks in a bank's investment strategies can seriously undermine projected financial returns. Disruptions, destruction of businesses, fines, litigations, and losses due to environmental or social reasons are core credit risks for the banking industry. Pakistan is among the top 10 countries most prone to the effects of climate change. Since 1998 alone, Pakistan has faced over 150 extreme weather events and man-made disasters. In partnership with the government of Japan, State Bank of Pakistan and IFC have developed and launched the ESRM Implementation Manual for the Pakistani banking industry. This manual draws on international best practices and will help banks mitigate environmental risks like pollution.
Hello. Check, check. Mic check. Test, test.
Hello, 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 check, mic check, check, hello, 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 check, check, hello, hello, mic check, check, 1, 2, 1, hello, check, hello, check, check, hello, hello, mic check, check, check.
Hello, sound check. Hello, 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 mic check. Hello, sound check. Hello, hello, sound check. Hello, hello. Hello, hello, sound check. 1, 2, 3. Hello, 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 sound check. Hello, hello, hello.
Hello, everyone. We would like the guests to start taking their seats so we can resume the second half of the session today. Hope everyone enjoyed the coffee break. We would request all guests to be seated so we can resume the session. Ladies and gentlemen, we would appreciate if everyone could be seated so we can begin the second session. Thank you. Thank you, guests. Please be seated. Thank you, guests. We are ready to start the second part of the session. Please be seated. Okay. Hello, everyone. We are starting the session now. Thank you, everyone. I hope you enjoyed the coffee break. Please take your seats so we can resume the session. For our first session on ESG integration in the financial sector, I would like to introduce our moderator, Mr. Syed Samar Hasnain, Executive Director, Development Finance of the State Bank of Pakistan, on the stage. May I also invite the panelist, Dr. Shamshad Akhtar, Chairperson, Pakistan Stock Exchange Board. May I also invite Mr. Amir Karachiwala, CFO, United Bank Limited. May I now invite Mr. Naeem Ahmed Mughal, DG Sindh PA. And lastly, may I please invite Ms. Wei Yuan, Project Lead Pakistan Sustainable Banking Project from the IFC. Over to you, Mr. Hasnain.
Thank you very much, Tanya, and good morning, ladies and gentlemen. My name is Samar, and I have the honor to be the moderator for this very distinguished panelist with so many bosses of mine you see here on this floor, you can see. With me on the panel are Dr. Shamshad Akhtar. I'll just, introduce in a sentence, and the rest of the intro will be coming on the screen. You can see that so that we can manage the time. Dr. Shamshad Akhtar, who has been the ex-governor of the State Bank of Pakistan, Federal Minister of Pakistan, and hold a number of prestigious positions. She is also the chairperson currently of Pakistan Stock Exchange. Thank you, Dr. Sabah. Next to Dr. Shamshad is Amir Karachiwala, who's a well-known banker in Pakistan banking industry and represents a bank, UBL, that has actually volunteered to fast-track this pilot project. Thank you, Amir Saab. Our next distinguished panelist is Naeem Mughal Saab, who is representing Environmental Protection Agency of Sindh. Thank you, Mughal Saab. Details are given again on the screen. And finally, we have Ms. Wei with us, who has been the part of this sustainable banking project for the last 2 years. Thank you, Wei. So let me share the format of this panel, because we are running tight on the timelines. After a few opening remarks, where I'll set the stage in just few sentences, then I'll pose a specific question to each panelist, and would like you to respond to that question in 5 minutes. So that will be the first round of the questions. And then we will move to the second round, where I'll ask a common question so that the banking industry can benefit from that. And all of the panelists will be requested to respond to that question. I don't know if we get some time. Probably we can take one question from the floor and then 30 seconds last advice to the floor. So that's the format of this panel. As all of you must have heard this morning, that ESG integration is no more option. May I remind that whenever we talk of change, be it digitalization or something else, if we don't do, we are left behind. Probably we become irrelevant, but we don't vanish physically. But ESG is that part where if we don't do that, a day might come when we are physically vanished. And who has not witnessed that, you see, devastating floods in Pakistan and the problems caused by that. When I was coming for this panel, I just reminded, you see, myself of a Hollywood movie. The title of that is relevant, not the rest of the movie. The title of that movie is, it was in 90s, Clear and Present Danger. That was a Harrison Ford movie. That title is very relevant to today's discussion, Clear and Present Danger. In this panel, we'll try to discuss as how we are trying to mitigate the risk caused by this whole episode, and how are we going to address this in financial sector. With this, I'll turn to my first distinguished panelist. Dr. Saiba, stock exchanges in number of jurisdictions promote ESG practices through various tools and instruments. In some cases, ESG indices, ESG guidance, ESG listing, rules and things like that. So the question is, can you please share Pakistan Stock Exchange experience to date, or any future initiative planned regarding ESG practices in private sector, the listed companies in Pakistan, that could be beneficial for Pakistani banks implementing today's ESRM manual? So over to you, Dr. Shamshad.
also establish another board. So eventually, and that's now coordinating with Pakistan's ICAP. And ICAP is also a member of our ESG task force, and we are hoping that they will bring in a lot of value addition to what SEC initiatives that we are embracing. Let me just make another couple of points which are important to inform that, you know, we just are not grappling. I mean, there's so much out there, but what we have thought about doing, what we have done first, we have developed model GRI guidelines, journal reporting guidelines, and we'd be happy to share. Then we are looking at the model, UN model guidance that is UN SECC model. And issuers select a globally recognized sustainability reporting framework, and I've outlined those, suited for industry, business, or banks. Then issuers have to agree on the policies, practices, performance, and targets to allow industry to adopt pertinent financial and non-financial metrics, which are extremely important, because earlier it was only financial accounting which came with a value proposition. Now non-financial matrix is being developed, which will have its own quantification, because there are resource use and efficiency, as I said. And issuers identify material ESG factors in financial terms. So drawing from the pertinent experience and research, PSX strategy, what is it? Of course, we have to wait till the regulator SECP embraces. It has already defined a roadmap, but it has to elaborate that further. Of course, we can now draw from the State Bank guidelines too, because it doesn't matter which regulator we are talking to. So drawing from pertinent experience and research, our strategy is to issue guidance on voluntary ESG disclosures and reporting for our listed companies, which include all your banks, because our market capitalization includes virtually all the banks. We are also in the process of conceptualizing to develop an ESG portal of data repository for collection, reporting, and analytics. As some of you may know, Karachi Stock Exchange 100 Index includes about 18 companies that are reporting quantitative ESG data, whereas 69 companies are reporting ESG and CSR data. That's great. And we are trying to lay down the architecture from literally ground to top eventually. We want to integrate sustainability into PSX operations, because PSX is a listed company. We want to develop and launch a variety of ESG indices, because we are in product diversification now to push for our business. Work has been underway. It's starting with the review of the landscape of ESG at our listed company level, which is 555 or so. In this context, we are reviewing the practices of the regional peers based on stock exchange, sustainable stock exchange model guidance, which I talked about. And we are also looking at company and sector frameworks and methodologies that our clients have deployed. We, as I said, are in the process of conceptualizing on the ESG data portal. We will adopt PSX's own ESG index, and PSX will also have a sustainability report in the next annual report. Given growing demand for ESG, rating agencies in Pakistan are also active in supporting data development, and the members of the rating agencies are also part of the ESG group. And we are going to be working all together for the computation of the index to allow for ratings ESG compliance. Ratings is critical, whether it is S&P or Moody's, whatever we pick, but also our local partners at risk, because that will be communicated to institutional investor to bring in the financing flow. To conclude on this segment, let me say complexities cannot be understated in. When I started the work, I thought this was the easiest thing to do. But as you may all have known, that it's actually a very complex business. Developing data and consistent and transparent ESG framework for financial and non-financial metrics and ensuring consideration of material factors in investment decisions within each industry and sector is quite a difficult job. Then we need independent evaluation of the ESG and its financial information, regulating common ESG disclosures for issuers, as well as ensuring, as I said, about the data and information from third-party providers. Now, just to conclude, I would later on, as you had told me, cover on what are the key takeaways from the review of the disclosure of our clients, which is basically the listed companies, particularly the banks, and the listed companies which are non-bank with whom we operate. So, Samar, I'll stop here because I know our time is limited.
Thank you very much, Governor Sahiba. It's always very difficult for me to say X. So it's a great pleasure to hear all of this, and let me accept that candidly that actually I was not aware of some of those things, you see. So that shows how important is coordination and collaborations with different stakeholders. Thank you very much for that. So our next speaker is Mr. Amir Krachiwala. In today's inaugural session, you must have heard that the banks sitting here are the central piece of this whole puzzle. And your bank is important. Why? Because your bank opted voluntarily to pilot this project on a fast-track basis compared to the other banks. So my question is, would you like to share your bank's experience regarding E&S risk assessment for the corporate sectors in your bank? How has that experience helped, you see, in preventing some of the potential losses to the banks? So this will give the real story to the floor. Over to you, Amir sir.
Thank you very much for inviting me. It's a subject that's new for us as well, although new for me and not for the organization, because we are really ramping up on our ESG very, very rapidly right now in the last few years. But to be honest, banks have been exposed to ESG a lot longer, because ever since we started financing the IPPs and the renewable energy, one of the requirements was that we had to have a foreign funding for the project. And the foreign funding brought about, they introduced the ESG standards at that time. So all the financing arrangement that the banks made during the IPP renewable, mainly the solar and the wind, had that component. So that gave us the exposure to build from that onwards. And from there, we actually used that experience into risk assessment of our export clients as well. I think Aftab sir mentioned that the export clients had to build the ESG into their business processes, into their factory processes, so that they could be compliant with the exporters' requirements, so the buyer's requirement. And that actually helped us build that thing forward as well. So over the years, we have had experience with it, and we have built, and our losses, as you're saying, we haven't really seen any losses. The real losses are going to come from the climate part of it, because right now we experience the flood, and that climate part which is going to impact us, because now all banks are also thinking about whether to appoint chief climate risk officer, because that's another very important component of risk assessment and the credit assessment, that what is the climate change going to do to you. So anyway, that's not part of this agenda, is ESG, but the thing is that it's very important that you see the ESG in comparison to the climate as well. But anyway, so what the banks have been doing, UBL particularly, has that over the years have actually built that, not only driven by sort of buyer's requirement or the exporters or the foreign lenders, but ourselves as well. So one good example would be the Malir Expressway, where the banks themselves put in covenants for ESG into their lending. And one of the CPs is that the the government has to procure land properly through the procurement procedures they have. At the same time, they have to ensure that the displaced communities and displaced persons are rehabilitated before the financing takes place. So the E&S components are built into the financial agreement, and that's not driven by anybody, but that's by the banks themselves. So banks are taking the leading role in developing ESG as well. And, but my last thing that I want to mention is that when you focus on E&S, for example, not everything is E compliant and so is S compliant. One of the debates going on right now is you can finance for, what shall I say, the financing for industrial and residential solar systems. Now that's pretty good because very, very compliant for E component, but does it actually meet the S component? Because the more high socio-economic financing is done to those components, they actually reduce the consumption from the distributors, from the discos. And because we have a cross-subsidy concept, cross-tariff, if the higher socio-economic move away from the thing, the burden of the operational cost will go down to the lower socio-economic. So on one hand, it satisfies the E requirement, but may have a problem on the S side of it. So E and S have to be looked at separately and together, and what meets one to the other. So overall, UBL and we are very committed, and we will continue in our path and our journey towards making a strong E&S environment.
Thank you, Ahmed Saab. And the challenge for you is that while the other banks would have a choice to fully implement that within a maximum tenure of 3 years. So let's see in the next conference that where does UBL stand, which volunteered to adopt that on a fast-track basis, you see. So thank you, Ahmed Saab.
Thank you.
Our next speaker, Mr. Naeem Mughal Saab. Pakistan banking industry caters to the financial needs of industries from various sectors, which expose those banks to the potential credit and reputational risk emanating from possible E&S non-compliance by clients in high-polluting sectors and industries. So the question for you is, can you please highlight some of the high-polluting sectors or industries in Pakistan, and what kind of environmental pollution issues are detected during environmental compliance inspections conducted of these companies? Over to you, Naeem Mughal Saab.
Thank you very much. First of all, I'm very thankful to the State Bank of Pakistan and the IFC for inviting EPA to join this very important session. Just a little brief about Environment Protection Agency. The Environment Protection Agency of Government of Sindh is responsible for the enforcement of environmental laws in Sindh province and rules and regulations. We have Environmental Protection Act of 2014. Previously, Sindh province, Sindh EPA was enforcing Pakistan Environment Protection Act of 1997. Then there was a devolution and the amendment in the Constitution of Pakistan by virtue of 18th Amendment, and the subject has been now devolved, and Sindh province has promulgated its rules and regulations. So main purpose of the rules and regulations is to protect environment in Sindh province, control and prevent pollution, and conservation of natural resources. So all set of rules and regulations are available, and there are many functions provided in the Act to protect the environment. The measure is through environmental impact assessment. That is the process where any new development project is conceived. So it is essential for any proponent to contact with the EPA and comply with the provisions of environmental impact assessment. We have checklists and everything. As far as your very important question, that what are the highly polluting sectors, for me sitting in the EPA, there are many sectors. I would say any industrial activity, any manufacturing activity, or any activity that human is doing that is somehow causing environment degradation. I just said here that we have got some kind of new approach here, with regard to the recent floods and getting things connected with the climate change. Climate change is certainly a recent phenomena that is a global phenomena, and Pakistan is very highly vulnerable. But if we talk about and speak about the environmental degradation in Pakistan, that has a long time story. And we have been degrading natural resources, we have been degrading environment in various ways since a long time. And towards climate change, environment has some kind of significant contribution by virtue of the global greenhouse gases. So the highly polluting sectors, I would like to say, not only polluting, but extremely consuming the natural resources. It's like textiles, dyeing and bleaching, highly polluting, use of high volumes of water, the chemicals, and like chemical industries, like leather and tanning processes, the steel re-rolling, steel mills, cements, the sugar mills, whatever you say, So what we have been observing and witnessing, let's just visit a hospital, because this is one of my duty. I just visit to public hospitals like Civil Hospital, like JPMC, in the interior. You will see the people on the grounds, laying on the grounds and floors. They don't have facilities. And the majority of the patients, they are from the environmental degradation, like water quality issues, like air pollution issues. So talking about the industrial processes is a very big issue, and we are facing the issues of air pollution in the city, Karachi, and all urban air pollution, and the indoor air quality. When we monitored air quality in Karachi, no place in the Karachi city is safe for inhaling air. No place. We are far, far beyond the World Health WHO guidelines, US EPA guidelines, and the worst places are the most congested, like Lakatabad and Tower. You can see the air pollution. Even you can see by sitting at Defense, you can see your friends, everything, the dust is coming. So particulate matter PM 2.5, which is very dangerous parameter, is very high in Karachi city and everywhere in the province. For me, looking into the air pollution control is a very important challenge. There's transport issues, there are other issues, even burning of solid waste. That is contributing toxins and carcinogenic gases. And going to marine pollution, we can see and we can witness, we have been to, many of us visit abroad very frequently, we can see the coastal lines, and we can look into our coastal line at Karachi. We have made a disaster to our marine life, the marine ecosystem, and untreated wastewater coming from industry, around 500 million gallons per day, MGD, and which is a major portion is domestic sewerage, which is going untreated into the marine pollution, and the industrial wastewater, about 100 MGD in Karachi city, that coming from textiles. And we are, EPA Sindh has been striving, although we have a lot of capacity issues and monitoring issues, and but we are trying our best. But I would say there is great reluctance from the industry people, from the investor, even housing sector. I can just give you many examples that how we are degrading, and that water which is going untreated into the sea, about 500 MGD, is a resource. It can be converted, used, because Karachi is facing a lot of scarcity of water, and in future we will be having very big issue on the supply of water. We already are a shortage. So that can be reused, and you can see that Karachi is barren. There's no plantation. We can use that water after proper treatment for the at least greening of Karachi, plantation purposes. So I have very little time that you have given to me, 5 minutes, it needs lot of time. So I am really feeling glad and happy that this realization has now started, and the banking sector. I was thinking about since long to have interaction with the presidents of the financial institutions and banks, and hopefully thanks to I got this opportunity ultimately to have a great interaction. I would request that although it's a very good initiative and effort by the IFC and the State Bank of Pakistan, that you are linking and streamlining your credit and green financing, and this really we are appreciating this. But my suggestion would be to look into the CSR. Many industry, many corporate, even just only some of the multinational units have their CSR, global CSR, policies. But in local investment sectors, they don't have CSR. So CSR can be utilized for the improvement of the environmental condition in the surrounding, for R&D, research and development, some kind of binding to the your clients, and some kind of interaction to be linked in your policies and guidelines with the EPA, Environment Protection Agency, so that it was very good slide in the first presentation of Madam yours, that it is not permits overburden just to get an approval of the EPA, and just it is linked and annexed. So we should have a very good interaction, so that if you have, we'll provide you access all the time, and some kind of verification process from the Environment Protection Agency about the reputation of, I would not say reputation, but environmental performance. So these are my suggestions, and hopefully it is not only the Environment Protection Agency that has the mandate to check pollution. We need support of everyone, every citizen, every civil society, every NGO, and every academia. So this is, joint responsibility of every citizen to do something for betterment of the environment. And I would say just one sentence. There are environmental quality standards. Environmental quality standards are basically the permissible limits to pollute.
Yeah.
Okay? And in my opinion, with the passage of experience of working in the EPA, we have done it, and we are now planning for zero discharge. Zero discharge is a technology where whatever resources you are consuming for water particularly, you have to recycle the water for your process, and you have reached, because ultimately the water is going to be precious, one of the precious, raw water, raw materials of the, factory, and certainly opting for the cleaner production facilities. And one more thing, workplace diseases. I have seen, gone to the textiles, I've gone to the cement, any sector. I first look into the laborers working over there. You can see their, situation, HSE, health safety issues. They're barefooted, they have no personal protective equipment. You just know how people fell from the long tower working. And housing sector now the Karachi housing scheme any multi-story, any building is only coming up with the RO plant. How many RO plants we will be having in Karachi for every building? We don't have even assessment of how much quantity of underground water we have and what is the sustainability. So we have to look into the sustainability of the natural resources. Thank you.
Thank you, Mughal Sahab. I had the claim of knowing Karachi because I have been living in Karachi for ages. But what you told is some of these are actually eye-openers. So thank you very much for that feedback. Our last panelist, Ms. Wei. As Mughal Sahab has mentioned, that environmental degradation is no longer a country-specific issue. It's a global issue. So it requires a coordinated global response. The role of multilateral institutions like IFC, Khwaja Aftab has mentioned about that this morning, is extremely critical. So my question to you is, can you please share your global experience on tools and best practices available to banks to manage E&S risk, as well as any plan to support Pakistani banks on ESRM, in addition to the training that you will provide? Thank you. Over to you, Ms. Wei.
Thank you, Summer. I think I'll just basically come in at two levels. The first level is really IFC's work supporting regulators, like in this case with SBP. This is IFC has been doing through our global network, Sustainable Banking and the Finance Network. And then we're seeing the growing trend for regulators interested in this space. I think in this specific topic of ESRM, is classical. Usually the discussion starts with to be or not to be. It's like people are asking, banks are asking, central banks are asking, should we do this or not? Is this extra burden? But with today's launch of the ESRM implementation menu, I think that's answered for the Pakistan banking industry. So that's a clearly combination of supervisory expectation and also a toolbox available for the Pakistan banks. And for those of you who may be interested, Basel Committee also launched a report this summer. I think that's a major milestone, basically clarifying Basel's research. It's still research perspective. It's not like they made the decision, but that's an important milestone in terms of supervisory expectation on the topic of climate and environmental risk management. So for us, FIFA and I, and of course Dan, for us working in the ESG space, this is very exciting. It's really a symbol of ESG mainstreaming into the financial markets. And then second, at specifically supporting individual banks, IFC is really, I think we come in with our secret tips, very operational, and it's not, as FIFA very well said in the morning, it's not just about doing good for our nature, but it's really practically for banks to manage risk. So just two things, I think two secret tips from our side is one is a systematic approach. That's what you hear from Dan's speech about ESMS. We keep on saying that because that's eventually the bank's own system. So you have policy, you have governance structure. And second is really a comprehensive risk management. So that's where we say this, don't single this out. Don't single ESRM out as a separate work stream. It's not going to work. You don't just get someone sitting in a silo. It needs to be part of the comprehensive risk management. And then once the bank understands that, I mean, you guys have been doing risk management for ages, you are pros, then it's a lot more easier to just look at environment social risk as additional risk factors. So I just stop here. Yeah.
Thank you very much. And I have been told by Tanya that probably we will not have the luxury of taking a question from here, not having a luxury of concluding this session because the time toss will be made at 12:30, something like that. So my last question, and every panelist will have 2 minutes to respond to that because that's a sort of a recommendation for the bank sitting here. SBP is fully aware that it will be very difficult, you see. This will be a difficult path. Therefore, we have given three years' time to implement this manual. So what is your recommendation for Pakistani banks on ESG implementation? We will start with Dr. Shamshad, and then we'll go to the next panelist.
I think you have already laid out a course, which I believe is a pretty reasonable one.
It's not a heavy burden. I would, in fact, from my standpoint, it's a very lightweighted recommendation, given the urgency on climate that I see. But, you know, as it gains momentum, knowing bankers, they're going to run very fast with it. I have to say that I have tried to review what's happening on the ground, both in terms of the corporates and the banks. And most of the corporates at the top edge, are actually doing pretty decent job in terms of sustainability reporting based on the metrics that they have established for their industry and the sector. And there are lots of commonalities. Most of them have gone for what I mentioned, global reporting initiative, but they have supplemented other guidelines reporting also. So there is a good tradition of moving forward there from the stock exchange point of view. Amongst the banks, I'm deeply impressed by the Habib Bank sustainability report. He's not here, Aurangzeb, because it's one bank which has categorically got an exclusion list. You know, you couldn't have more lethal weapon than that for climate action. So they have that. Then if you look at I'll just pick up one other company, which is Indus, backed by Japan's tradition. And as all of you may know, Japan is a leader on innovation and technology. And the sustainability report of Indus is very impressive itself. One, it has tremendous amount of emphasis on decent workplace. It stands out for that. It also has emission matrix. It's got virtually everything, the recycling, and most of the, by the way, sustainability reporting, whether corporates or banks, have reduction in emissions, recycling of the waste, recycling of the water. Now, they may not be moving at the rate at which we desire, but we need also infusion of technological solutions, which neither central bank nor stock exchange can intervene. Yeah. So we need to promote companies that can bring innovative technologies to move on that front. Over.
Yeah, thank you very much. Amir Saab, what is your recommendation for the banks sitting here?
So basically, I'm a commercial banker. So my first thing would be that as long as it's commercially viable, and I'm sure it is, and at the same time there are incentives built into this green lending and sustainable lending, then the adoption rate will be much faster and much higher. And so that's the way the policy should be designed. I haven't seen it, must admit, but I haven't, but I'm sure that it has all the right components. I've had a discussion with SEMA as well, so it's all going to be part of just sort of incentive based, so therefore adoption will be easier. But the main thing is to set up a unit. We've already done that in UBL. We were a person who heads it right here, and it's his task to do that. And we're rolling out a whole plan. So I'm sure all the banks can also do the same. So the advice is that set up an ESG unit, integrate it with the rest of the organization, see the commercial viability, train people, hire the right skill that Aftab mentioned. And I think the process is going to be win-win for all, because not doing it is going to be obviously a huge risk. As we mentioned about climate risk is coming. So even lending now has to be thought through that what kind of a climate risk your current traditional borrowers are subjected to. So therefore, I think ESG adoption will be faster and a lot quicker in my view.
Okay, thank you very much. Mughal Saab, apart from the CSR, because the bankers are sitting here and they will say that they do quite a lot on that. What is your recommendation on the banks to implement this ESG on a fast-track basis?
Yeah, I think from presentations I have seen that IFC has guidelines and the green financing guidelines, and you know, the initiative has been taken. So, in my opinion, all banks, financial institutions, when they are appointing their, officers, for this purpose, they should be taken for capacity building, to understand the environmental issues, to understand the legislation, rules, regulations, and the Act, and the thorough understanding about the issues. For that purpose, Sindh Environment Protection Agency can provide expertise and advice for their trainings, apart from having the modules from, so in order to have a practical knowledge about the issues and the technologies. Okay. Right.
Thank you very much, Mughal Saab. Very last minute recommendation for the banks.
Yeah, I guess just 3 things. These are really from IFC's past experiences working with banks in emerging markets. One is commitment and full support from the very top. And also, this is a chairman level, board level, and also fully understand what the implications are for the business, understand the commercial viability, just as the UBL chairperson really correctly said. Second thing is really a strong internal champion. And the internal champion, we mean not just the additional ESG tech expertise, but also like a hardcore banker who really understands it and then can promote it internally. So it's not perceived as something external being brought into the banking industry. And the third thing is external support, technical resources. Very excited to hear from the EPA. From other markets, we're seeing that there is this information sharing between the banks and the environmental performance data, which you just mentioned. We see some other markets, this mechanism is already established, facilitated usually by the central bank. So there's this information flow. So these are the 3 practical experiences we have seen from other markets.
Thank you very much, Wade. I can sacrifice everything, my concluding remarks, but what I cannot sacrifice is that today is Iqbal Day. So Iqbal ki nazm ke chand sher, 3-4 sher. I cannot do that, you see, because Diyar-e Ishq mein apna, and due apologies from the foreigners, you see. Diyar-e Ishq mein apna maqam paida kar, naya zamana naye subh sham paida kar. Khuda agar dil-e fitrat shanaas de tujhko, सुकूत लाला व गुल से कलाम पैदा कर, मेरा तरीक अमीरी नहीं फ़कीरी है, खुदी न बेच गरीबी में नाम पैदा कर. इकबाल हैं ये. मैं शाख़ ताक हूँ, मेरी गज़ल है मेरा समर, मेरे समर से नए लाला फाम पैदा कर. Ladies and gentlemen, round of applause for the panel.
Thank you, Mr. Samar Hasnain and the speakers for sharing their valuable insights on environmental social integration in the financial sector. Now I would like to introduce the moderator for the second session, which focuses on climate finance, climate risks, and climate-related disclosure. Please welcome Mr. Yasin Anwar, Senior Advisor to IFC Sustainable Banking Project and ex-Governor, State Bank of Pakistan. On the panel, may I also like to invite on stage Mr. Nadeem Khalid, President, WWF Pakistan. May I invite on stage Mr. Toshio Odagiri, Consul General of Japan in Karachi. And may I also invite Mr. Farhan Fasiuddin, Principal Investment Officer at the IFC.
Thank you very much. Before I start, just a few words I wish to say. First of all, Dr. Shamshad Akhtar, Governor. DG Seema Kamil, thank you very, very much for organizing this. Aftab Ahmed, thank you. And Zishan from IFC. My other colleagues from SPP, senior colleagues of mine, and my fellow banker friends, thank you very much for being here on a holiday. I have got the most difficult task here at the last but not least, but I'm told that there's a cricket match that I've been inundated with the last day or so to keep this short. So I'm going to try and cut this short as much as possible so all you cricket fans can get out of here by 12:45. I happen to make that quote to somebody who's going to hold me to that. So we're going to do our best to cover this as quickly as possible. Very much so. Let me quickly go through this. I'm going to have only a couple of questions to our colleagues here, distinguished panel. Before I start, I want to say about 4 minutes of my own words. Yesterday, I was invited to speak online at COP27 in Egypt, as I was invited in Glasgow for COP26 as well, in my capacity as chairman of Central Asia and Pakistan for Green Investment Principles, which is founded and co-chaired by the UK government and China. Let me first highlight quickly and share with you the key issues I raised yesterday at the Global Forum, which was attended widely, as was mentioned earlier, by Aftab, 35,000 people. And we had in my panel with the Vice Chairman of Paulson Institute, the People's Bank of China, and the WWF Vice Chair was there as well. For financial markets, climate finance, managing climate-related financial risks and disclosure of such risks are the top priorities at the forum. Globally, climate investment remains vastly inadequate given the size of the challenge, particularly in developing countries where the majority of decarbonization investment is required. Managing climate-related financial risks is also a new subject that requires action not just by regulators, but also banks. With the support of key stakeholders such as our panelists today, MDBs like IFC, developed country support such as Japan, and last but not least, international NGOs such as WWF. The gathering at Sharm el-Sheikh yesterday at COP27 is to push action on climate change. Climate change has become a risk that is too important for investors to ignore. At the same time, the financial sector plays a key role in the fight against climate change. We've heard that this morning from the governor and everybody else. Strengthening the financial sector resilience against environmental risks cannot be ignored. Sustainable investment is becoming mainstream. More than $40 trillion of assets globally are being managed in ESG investments, up to 35% up from 2016. Global investors plan to further double the ESG assets over the next 5 years. Let me give you a few examples. Singapore and Australia are planning a $22 billion mega infrastructure project to provide solar energy from Australia to Singapore via undersea cables by 2027. This is the largest green project in the world that will provide 15 to 20% of Singapore's power needs. Last year, Harvard University's $42 billion endowment fund announced it will start divesting from fossil fuels. HSBC has announced a joint venture to form the world's largest natural capital manager, targeting $3 billion. This JV will be the first large-scale venture to mainstream natural capital as an asset class. BlackRock, the largest asset manager in the world, just lost $1.6 billion in the last few weeks from 2 states in the United States who withdrew their assets because they object to the wholesale policy that BlackRock has in investing in ESG assets only. It's not only about renewables and electric cars. Greening will have to take place across all industries: steel, cement, mining, building, construction, maritime, agriculture, etc. Environmental risk management in our financial institutions is and must be a high priority. I repeat, the financial sector plays a key role in the fight against climate change and for a sustainable future. Green banking guidelines need to be established by all financial institutions across banking, insurance, and asset management. The latter I underscores because it has growth potential in this country, and we must look at that carefully. Given the backdrop of COP27 and Glasgow earlier, and today's program, let me proceed to our distinguished panel of experts to enlighten us more from their respective fields of expertise. My first call will be on His Excellency, the Consul General of Japan, who is the key donor to IFC and this project, without which we would not be here today. I must compliment Japan in this effort. And before I go on to introduce, I would like to mention the chairman of the Japan Business Council, Mr. Kaleem Faruqi, who's in the audience as well, was just recently awarded last week one of the highest awards that Japan government could give. Let's give a round of applause to Kaleem. Okay. It's a real honor for the country, and he has done a tremendous job in promoting the goodwill between the two countries. Your Excellency, we're very grateful and gracious that gracious of you to come over and grace us with your presence. I know this is not normally your course of speaking engagements to the banking sector, but that is not what we want to hear from you. We want to hear from you your words about the contributions that you have given to IFC's project here that has enabled us all to be here today. We want to thank you for that, but we'd like your comments on that.
Thank you, Mr. Anwar. It is indeed a pleasure to join the panel to represent Japan here today. At the outset, taking this opportunity on behalf of the people and the government of Japan, I would like to extend my heartfelt condolences and the deepest sympathies to the people and the government of Pakistan at the tragic loss of lives and damages caused by the torrential rains and flooding throughout the country this year. The post-flood recovery is an urgent issue in Pakistan. We sincerely hope for the earliest possible rehabilitation of the affected areas. Japan remains committed to providing support. And today, the Governor, Mr. Jamil Ahmad, officially launched the implementation manual for the environmental and social risk management. I believe this initiative is extremely timely and important for Pakistan. With the COP27 taking place right now, I believe this will be a good opportunity to show the world that Pakistan is taking a big step forward in trying to tackle climate issues on its own in the banking industry. In Japan, many companies and banks have come to view global warming measures as a source of the competitiveness rather than a cost to the company. We hope the similar recognition will be widely shared in Pakistan. That we have 80 Japanese companies operating in Pakistan, including the Indus Motors. They are keeping a close eye on how the country is trying to deal with environmental and social issues. The sustainable development in Pakistan is also a major interest for the Japanese companies here and future potential investors. So from this perspective, Japan welcomed SBP's initiatives. As a donor, the government of Japan is pleased to support the effort of the State Bank and the banking industry of Pakistan.
Thank you very much, Your Excellency. It's very kind of you to have graced this occasion on a holiday particularly as well. But we're all very grateful for your support, and we hope to continue working very closely with Japan, both IFC and State Bank of Pakistan. Thank you very much. I'm going to go on to the other two panelists very quickly. And the question I would like to leave first to Nadeem, who's president of our WWF organization here in Pakistan, has done a great deal of work in this over the last many years. I'd like you to explain a little bit to us in the banking sector what you have achieved here in WWF over the last few years, what you've accomplished, and how Pakistan banking industry can benefit from that particular sector. And I'll come back on the second question, follow up later on some of the future aspects. Please, Nadeem.
I'm truly grateful to IFC, SPP, and Yasin Anwar Saab, you, for inviting me over to this panel discussion about the climate change and the risks involved. To give you a brief, before I go to give you a brief account of what WWF has been doing in this respect, according to a Greek myth, god Apollo, he falls in love with this beautiful lady, Cassandra, and he gives her the power to predict the future. But when she refuses his advances, he curses her. She will still be able to foretell the future, but nobody will believe her. So same is the fate of scientific community and organizations like WWF, which have been warning about these changes way before they happen, but nobody listened to them. Many of you may have seen this wonderful movie, An Inconvenient Truth, by US Vice President Al Gore way back in 2001. There he showed us with empirical evidence how climate change is damaging our future prospects. And how carbon emissions are responsible for the rise in the global temperatures. He was made fun of, nobody listened to him, and the mainstream US media and the state functionaries went for complete denial of this phenomenon. So this damage and loss to nature is relentless. Our health, economy, and livelihood are all imperiled. Our seas, rivers, forests, and the very air we breathe in are under an overwhelming threat. The eruption of pandemics, wildfires, floods, intensifying tropical storms, and significant decline in wildlife are all symptoms of our predicament. It's not an ordinary problem, it's an emergency. It has the potential to replace poverty and become #1 issue in today's world. We have done more damage to the nature in just the last 30 years than in the entire 200 years of industrial revolution. If we don't undertake urgent measures and contain the temperature rise to 1.5 degrees C from pre-industrial levels, there is a danger of it rising to around 3 degrees C, and the damages will be just unimaginable. WWF, I'm coming back to what WWF has been doing in this regard. It's a unique organization which has the expertise and international reach to effect policies on climate change, water scarcity, sustainable food production, and biodiversity. With over 6 million activists around the world, it's currently operating in over 100 countries. Commendable work has been done by WWF in numerous pioneering efforts, such as the flagship project Recharge Pakistan, in collaboration with Green Climate Fund for rainwater harvesting. So, as we all know, Pakistan either has too much water and nothing at all. So, this needs to be taken care of. WWF Netherlands is part of a consortium that is managing the Euro 160 million Dutch Fund for Climate and Development. This pioneering partnership of NGOs and financiers aims to help developing countries build climate-resilient economies. WWF Pakistan has got seed money and is working on the development of detailed proposals for DFCD on the fisheries, aquaculture, and forestry areas. In fact, in the last 1 year, 3 projects are already in operation in Sindh province, especially in the shrimp hatchlings industry and some fisheries. As we all know, textile industry is the backbone of Pakistan. It lacks environmental compliance as they see it as an additional financial expense. The prevailing notion that environment-friendly practices create extra financial burden on the business needs to be addressed by demonstrating that such practices in fact save resources and reduce the cost of doing business, along with the reduction in environmental footprint. WWF Pakistan is leading an initiative named Decarbonizing the Textile Sector of Pakistan, funded by National Appropriate Mitigation and Action, NAMA. This is a consortium of international donors for devising new financial tools in order to decarbonize the textile sector of Pakistan in collaboration with National Energy Efficiency Conservation Authority and Ministry of Climate Change. This NAMA initiative is still at the feasibility stage, which will provide the SME sector the financial facility to improve the resource efficiency, energy efficiency, and renewable energy under the umbrella of State Bank's guidelines. And it will also be introducing a revolving fund for SMEs. In order to compete into international market, we need to introduce new climate finance tools for adaptation and mitigation. IFC has played a very crucial role in materializing the financial support for resource efficiency technologies in Pakistan. The same is required for energy efficiency, which offers more emission reduction possibilities. State Bank of Pakistan introduced green banking guidelines in 2017, and several financial institutions and banks provided loans to the business for solar energy. Our request from IFC and the State Bank of Pakistan is to tie all industrial loans to genuine environment assessment studies, not just for the export industry, but for the local industry as well, because it is also polluting our environment. SBP may consider soft loans for the industry to comply with the environmental standards. Countries like Pakistan, which contribute little to carbon emissions but are directly affected by the global emissions, are right in asking for reparations. But before asking for any compensation from the world bodies, we must put our own house in order. The way we are polluting, even as the projections show that in the next 10 years or so, by 2030, we'll be increasing our emissions by 300%. Though they may be small by global standards, but they still are something to be taken care of. You can imagine that how we are polluting our rivers, our subsoil water, as the managing director of EPA was just telling us, how the industry is contributing towards that. Just in the city, Karachi, 5 to 6 million gallons of liquid waste is dumped into the sea every single day. So without addressing these issues, we are all aware in Bangladesh, there was a time that cyclones used to take hundreds and thousands of lives. But today, the damage is limited to just a few dozen people. That means that climate resilient policies are possible, and the banks and the State Bank of Pakistan and the government of Pakistan in the form of Ministry of Climate Change, EPA, can enforce policies which can restrict this pollution and damage to the society and our environment. Thank you so much.
Thank you, Nadeem. Very important points you've made, and it highlights the importance of, for example, the fisheries area that you mentioned, and how what the EPA gentleman earlier had said, how it's polluting the waters. I think is something we need to take into serious consideration. This climate change issue and the risk associated with it is unstoppable. It's going faster paced than we had expected. Let me quickly turn over to Farhan, who's a resident expert in any case in this area, so he can give his little contribution how IFC's work is contributing to the banking sector here.
Sure. Thank you, Yasin Saab, and thank you to the State Bank for having me on this panel. I'm not going to refer to my notes. I know it's less than 11 minutes to toss, so everyone will probably want to know what's happening there. But since we have bankers in the room, either current, retired, or aspiring bankers, I thought I'll share some stats. So the World Bank Group, you know, it's the largest provider of climate finance in the world. They did $31.7 billion in climate financing in FY22. IFC, the private sector arm, did $7.7 billion last year, right? Of which $4.4 billion was on our own account, and we mobilized about $3.3 billion from other investors. Half of this was done through financial institutions. Pakistan's share of IFC's financing was limited to just 8.8 million, which is less than 0.4% of what we did last year. And this too was thanks to a transaction we did with Bank Al Habib, a 21 million transaction under the Global Equipment Finance Facility. So clearly, a very tiny piece of what we're doing globally is coming to Pakistan. So the question arises, why? So in my mind, two main reasons. One is unrealistic pricing expectation. I think what the market thinks the pricing should be on financing, including clients, is very different from what the reality is and what we're seeing in other similar risk countries. The second, more important, is ESRM compliance. And as Aftab was mentioning earlier, pricing, you know, at the end of the day, we can do, Pakistan is a very important part of our program, and we have access to donor money. We can do transactions that break even in the country. But there's zero tolerance on the risk side and ESRM. So I think that has been, for us, the biggest bottleneck in doing more in the country. So what we've done is, over the past years, and both Dr. Fifa and Wei mentioned, is that we've been working to help, deal with the bottlenecks on the legal, on the regulatory and policy side, trying to remove that, working on advisory, setting standards, and helping move the banking sector and the regulator in a direction where we can do more and the ENS risks come down so we can do more in the country. In terms of numbers, again, IFC has been one of the foremost providers of green bonds in the world as the largest DFI. We launched our program, our own green banking program, back in 2010 and have done about $10.6 billion worth of green bond issuances ourselves, of which, cutting, I think, 178 total bonds in 22 different currencies. So we've raised that money to then invest in those countries in climate finance projects, either directly or indirectly through financial institutions. Overall, since 2005, which is when we started measuring the impact of our climate exposure in investments and advisory, we've done a total of over 50 billion in investments, of which about 23 was mobilized through others and 28 billion was on our own account. So I can stop there, Sab, or I can go on with some.
Thank you very much, Farhan, for your insightful comments. And I'm going to come back to you on that last point that you mentioned about green bonds in your second round, which will be right after I talk to His Excellency, the Consul General again. I'm getting strange looks from a gentleman who had talked to me about the timing to get back to his cricket match, and I don't want him looking at watch all the time and looking at me. He knows who I'm talking about. I promised the banking industry that we'll be out of here by 12:45. Your Excellency, I'm looking at your profile. It seems that you have been in charge of international cooperation projects at the Ministry of Foreign Affairs in your home country. In deciding whether to finance a project, the World Bank and other international development finance institutions have always checked on whether environmental and social risks exist and have been addressed. I imagine that a similar system has been established for yen loans and grant aid from Japanese government. Would you like to share your experience with us in this area?
Sure. As you have mentioned, I was responsible for official development assistance when I was in Tokyo Foreign Ministry. I was formulating policies and supervising the implementation of the various ODA projects, including ENLON in the Central Asia and Caucasus region, and such as the construction of the natural gas-fired power plants and road constructions. I'm also monitored and guided grant assistance operations in the Southwest Asia, including the Pakistan. When a government decides whether or not to implement a project, the significance of the project and the beneficial effects are, of course, important, but we believe it is also very important to check whether the project has any environmental and social risks, and if so, whether these risks have been properly addressed by the recipient government. In the past, there were cases where environmental and social risks were not sufficiently verifying, resulting in the major environmental and social problems later on. Based on our bitter experiences, it is imperative that we always scrutinized environmental and social risks from the perspective of managing Japan's reputational risks when implementing the international cooperation. So if a situation arises in which reputation risk is not managed well, the great deal of the time and effort will be required to recover from the damage. So the same recognition is spreading throughout the Japanese banking industry, and the importance of the environmental and social risk management is becoming widely accepted. I understand some Japanese banks, especially the mega banks, are playing the leading role in promoting the international standards in Asia of environmental and social risk management. So we welcome the fact that these efforts have begun in Pakistan with IFC support and SBP's leadership. So we believe the taking into account environmental and social risks will lead to the development of the qualified infrastructure, which is key to supporting Pakistan's sustainable growth. So therefore, we believe that the new cooperation between Japan and Pakistan, which will allow the sharing of the Japanese knowledge in the banking industry, will stimulate investment by the Japanese companies and continue to make a significant contribution to the Pakistan's economy. So I believe that Japan will join with the Pakistan in pursuing the goal of the economic recovery, the development, and the prosperity. Thank you.
Thank you very much, Your Excellency. You've touched on something that's very important and something that we're wrestling with we and AFIFA in launching the ESRM manual about environmental and social risk and how you manage that with the banking industry and other loans. That's not an easy topic. Perhaps we'll pick your brains in how to address that more easily. AFIFA is something that we have talked about in the social risk, how you address that. In our entire country, because of our cultural issues, it's not an easy task to challenge. But we will pick your brains on this, perhaps. Thank you. Let me go quickly to the last two panelists for just a question for each. Farhan, I wanted to come back to you first. You touched on green bonds. You know, recently, actually hasn't been released, the Dutch Central Bank and the Bank of England have completed a nature study. It has not been released. It's going to be released very shortly. That will be released in maybe near future and has an impact on financial stability. This is where Mark Carney has been involved in as well. So we'll be seeing that report very soon, perhaps right after COP27. The London Stock Exchange has issued more than 200 green bonds in the last year or so, recently, valued at more than several $100 billion. You touched on that as well. The Saudi Public Investment Fund recently issued a $3 billion green bond in London as well. More are in the pipeline. Can you expand on your experience with green bonds, and particularly in the Middle East, Africa region, which I know you've got exposure in that area, and how Pakistan can expand on that? Because I know WABDA issued a green bond last year for $500 million. That's about the only one. Perhaps you can enlighten us how the Pakistan industry, banking industry, can benefit from this.
Sure. So as I was mentioning in the earlier, so IFC itself has issued its own green bonds, 178 of them in 22 currencies, totaling about 10.6 billion. In addition, of course, we've been the anchor investor in a number of issuances. Just last year, Commercial International Bank in Egypt, CIB, we did the first private sector, it's the largest bank there, private sector bank, and we did the first issuance there of 100 million with them, and IFC was the anchor investor. We did the whole thing. Some years back, we did BCP in Morocco. Again, the first green bond done by a bank in the Moroccan market. Currently, we are working with JKB, a Jordan Kuwait Bank in Jordan, to issue a $50 million green bond. Smaller in size, smaller market, so, but again, it will be the first private sector green bond. So there's a number of examples like this that we've been working on, inaugural issuances, working with the regulators, making sure that they meet the green banking principles, green bond principles, and then being the anchor investor and opening the door for other investors to come in as well. We also did in September, we did what we called, and this is something that's run by our treasury group, we do these trainings which we call sustainable bond trainings. So we invited the financial sector as well as the rail sector from Pakistan. We had very good participation. And the idea was, again, to have corporates as well as financial institutions see the process of what is a green bond, what is a gender bond or other sustainable bonds, and what needs to be done to be able to get to the point to issue. There was a lot of interest both from the rail sector and from the financial sector. I think the key is going to be the bottleneck that I was mentioning earlier, and I think the work that we've been doing and partnering with State Bank on this manual, I think once banks take this not as a nice to have, but as a mandatory requirement, not because it's coming from the regulator, but because this is the future, I think that is really what's going to change and move the needle in terms of issuances coming forth and IFC investing in them. We're very keen to do so. And we are in some discussions with banks that have shown keen interest because the pipeline is there. Based on the estimates that we've done, we think that the pipeline could be bigger than the GDP of Pakistan, right, in terms of deals that are out there. It's just a question of banks being ready and corporate clients being ready to meet the requirements in order to be able to go to the international market. And like we said, IFC could be the anchor investor, be the first one in there. But with our presence, it encourages other investors to come in, and that can open the doors. Thank you.
Thank you. You've touched on a very important point. You know, Africa has got tremendous liquidity and has ample opportunities for such bonds. There's a figure that's tossed around. There's about $4 to $5 trillion of liquidity that's available for launching some of these bonds, but many of the deals are not bankable. That becomes a problem. But he mentioned about anchor investor. When you have a problem with making a deal that's bankable and getting offshore investors to come in, perhaps an anchor like IFC will diffuse that potential concern that offshore investors would have because there's legitimacy added to an emerging market economy. That's something just food for thought. Finally now, just at the end, I know we're running on tight time fuse. Nadeem, finally, on your WWF pursuing its forward-looking policies, could you, particularly as it relates to Pakistan, could you highlight just a few minutes what you see are opportunities that you're looking at and how they can help the Pakistan banking industry as a forward-looking future policies that you might have?
Well, as I've just mentioned, the opportunities as well as the problems are unlimited. We can obviously intervene only at a very limited scale, but whatever we do now will be defining the future of Pakistan. So, as we all know, the industry is not highly developed in Pakistan, so that's one of the reasons why we are not contributing to the environmental degradation to the scale like developed world is doing. But still, as I've mentioned, a couple of organizations like Green Climate Fund and DFCD, I have high hopes from DFCD intervention, especially in encouraging industries which are environmental friendly, which look after ecology and the minimum impact on environment. We have 1,700 kilometers of coastal lands. So here, the chances of developing fisheries and hatchlings are very promising, and a lot of investment from the banks may encourage and in fact not only reduce our reliance on imports but also help in Pakistan exporting these products to the Far Eastern market, especially Japan, where it is in high demand, and now from China as well. These projects, obviously we need to prioritize where, but all these projects need to be bankable. And obviously that needs to be done by the State Bank and the commercial banks to see the feasibility of these products and how these products are impacting the economy and also helping the disastrous impact of this environmental degradation. I believe that if EPA and the banks can get together, and only if the risk assessment studies are done properly, genuinely, I think it can pave the way forward, and Pakistan can help. It can help Pakistan economy. Otherwise, we are doomed. The dangers are unlimited, and frankly speaking, our shrinking exports will be further burdened by the restrictions being imposed by the importing countries, because now nobody wants to import from an industry which is itself not following environmental rules and they are so it will only be possible if we follow these rules, and banks can implement these rules very easily. They can tie all the industrial loans and make them responsible for the actions or for the environmental damage they may be able to do for the environment.
Thank you very much, Nadeem. I'm sorry we're running out of time, but I wanted to say thank you to WWF because they were our partners yesterday when I was speaking at COP27. And you've cited doomsday scenario that is applicable to the whole world if we don't do something very quickly. And in fact, there are incentive mechanisms in the organization that I mentioned earlier about when I spoke yesterday, Green Investment Principles, which is based in Astana and covers Central Asia and Pakistan. We've got an incentive system where awards are given out for any bank or institution that has done well. For example, one of my old alma maters, Industrial Commercial Bank of China, got an award last year for a project that they underwent very, very quickly. And I know ICBC is represented very well here and the world. Let me quickly sum up because we're running out of time and I'm going to get dirty looks if I don't adhere to my commitment. And my conclusion with the bankers, climate change, as we all know from this session, is an existential challenge of our time and has become even more important with COVID-19, which has sensitized the world to how vulnerable we all are to the forces of nature. COP26 and COP27 are testament. The world has finally begun to take climate risk seriously, as we have as well. How capital is allocated to support this effort is a priority. And as owners and stewards of capital, we have a responsibility to responsibly direct regulations and investments to activities that promote sustainable development. And I emphasize that we are the stewards of capital, and we must responsibly allocate these resources. On that final note, I would like to thank once again my distinguished panel for this most enlightening conversation and interactive session, which has been very enlightful. And I'm sorry we didn't have more time, but you have to blame it on international cricket for this, okay? Anyway, thank you very much for your audience, and thank you very much for your patience.
Thank you, Mr. Anwar, and all the panelists for their insights. I just wanted to mention that the ESRM manual is on digital display at the entrance for anybody who's interested. Now I would like to invite Ms. Seema Kamal, Deputy Governor of the State Bank, to deliver the closing remarks.
Okay. Thank you. Is this working? Yeah. So just for those of you who don't know, New Zealand has chosen to bat. So I was watching that. So I know everyone is very eager to leave, and I will just make three main points. First of all, I think it'd be very remiss of me not to thank everyone who has been here today. It was a holiday, it was a cricket match, and thank you so much for coming. I'd like to thank the team that has worked on all of this. But before that, I'd like to thank His Excellency, the Consul General of Japan, for your support and for staying with us this morning. So thank you so much for that. I'd like to also acknowledge the working group that has been done all the work. We're all sitting here and saying, okay, great manual, but they did all the work. And so I'd just like to quickly mention each of them, and I hope that you'll be patient. Yaseen Anwar Saab, he kept us on the straight and narrow. The number of times that we relaxed and didn't hold meetings, he would call me. So I think full marks on that. And of course, we and Afifa, who kept us and who were very patient with us, and thank you for all your work, Afifa and we. From the banks, I think we haven't thanked the banks. They were on the working group, PBA was there, as well as we had Ashwin and Safdar from UBL, Farhan and Sohail from Bank Al-Falah. We had Asher from Mizan Bank, and we had Usman Sajjad from Standard Chartered Bank. When we did the consultation on this, we had 400 comments from banks. So I think we do need to acknowledge their input. And last and most not the least, of course, the State Bank team. We know, of course, Syed Samar Hasnan, but then he had a number of persons helping him. Our director, Dr. Mia Farooq, Sadiq Ansari, Akhtiar Ahmed Saab, and Shahid Rabbani. So we had not just DFG, but also BPRD and so on. Now to conclude, and thank you so much, all of you. Really, we appreciate everything you've done. I'll just say two things. One, To the banks, because I've been on the other side. While we issued the green banking guidelines, and we all got them, I was on the other side at the time. One of the natural reactions was, okay, something more we have to tick, okay, compliance is going to ask. And no one, and I'll be honest with you, the bank that I was in at the time, no one wanted to be the green banking officer. Okay? And I think many of you will understand what I'm saying. So should it be in corporate? Should it be in risk? No, I don't want it. You take it, right? And I think, and I hope that since then, people have woken up. So please, my main point is that it must be followed in letter and spirit. And I think, given the emergency that we are in, I hope that everyone understands that this risk is not very far from your risk of cyber attacks, which you take so seriously, because we don't want to be in a position when you're hit with something and then you don't know what to do. And I think now with the floods, we have come to that realization. So please, you have to take it seriously. And that leads to my second point, that the State Bank, and at least we will do our utmost to take it as seriously as possible. So we've got our champion banks. We call them champion banks, and I'll announce them. It's United Bank and Bank Al Habib. And while they're champions, that's very good, but they're the ones who's going to have to prove it, and we will not just forget about you. We will be on your case, shall we say, in the nicest possible way or not, as the case may be, because it's very easy for us to forget it. And we've been very kind with 3 years, honestly. And when you talk about incentives, I think Ahmed talked about them. Incentives, carrots and sticks come together from regulators. And really and honestly, if we move ahead as we want, and we're going to make, once we have a green taxonomy, which is very important, and the governor spoke about it, we will have to start looking at risk-weighted assets and climate risk weights and capital. That is the only way I know from my background in banking that we will actually wake up. And I think Bhatti Saab, who's there, and you all know Bhatti Saab, he's nodding at this time. So this is not a threat. We've got 3 years and we're committed to that. But please take it serious before it hits your balance sheets, because this is not something to be taken lightly. So thank you, and I hope we have a great match, and then you have an exciting afternoon. I think I can promise you an exciting afternoon. Okay, thank you so much. Thank you for being here.
Thank you, Deputy Governor Ms. Seema Kamil. This marks the end of the conference today. Thank you to all the speakers and participants who joined today. Just a parting note, there is feedback survey that we will request any kind of feedback that will allow us to do these events in a better form going forward. Everybody, please enjoy the match. Lunch is also served in the next room, and thank you all for your time today.